Good morning, traders. On this beautiful December 4th, we're witnessing S&P hourly chart, which is key day trading trend chart, frozen at reversal zone and massive correction. This is proprietary Fibonacci tool you can install on any platform of your choice, and you can apply it to any time frame, any instrument of your choice, using the rules you learn in Fibonacci courses. So since S&P completely asleep, and what we would like to see is powerful selling pressure, which more than likely not play out until S&P is here. And if it plays out here, what is key support? This level. But if I bring up this chart, it looks exactly the same. However, this is a market on monthly. This is your investment decisions. 1800 key support in 2016 showing you. If this key support respected, bullish rally will skyrocket to 2800 as price had done in 2018. This is market now, 2018, reached reversal zone 2 years later. And again, this is monthly and this is day trading chart. Charts are twins. And if S&P starts pulling lower, we will be very much excited to see the market at 2770. Identical strategy, identical level. What is the difference? Risk management and trade duration time. What is price showing you? Do not acquire position at reversal zone. By the time you come to reversal zone, you are in significant profit. You are not entering trade here. If you do, your success rate drops to less than 20%. And if I convert this chart to 5, strategy will remain the same. Not the place to buy. That's how Fibonacci level identify days in advance keep you out of trouble. And that's the reason I named this level reversal zone. So, if market collapsing to this level, it's such a beautiful news. Because exact same strategy as you saw played out on monthly. Exact same significance as you saw played out on monthly. And if I squeeze this chart very carefully, you will see that's what price had done at reversal zone when market gapped in overnight session on December 2nd. But you knew that since 2016 if you use your investment decisions. Shock or not. So if market's selling off, it's a beautiful news for knowledgeable day trader. And if price collapsing to this level and rules are met, take long trade. In the meantime, let's walk down memory lane and let's see the power of the method, the power of predictive Fibonacci qualities, which is not an indicator years prior. As S&P testing you to the core and dancing in very choppy, untradeable market conditions. When this key Fibonacci support respected, famous 1800 number on monthly, this is trend inception on weekly. 2016 market rallies and reaches the end of the minor trend. Price frozen in pain because this is key Fibonacci resistance. Showing you very clearly this resistance is out, market will reach 2300 and will follow to 2500. This is what S&P had done next, selling off from this level. Shock or not, as expected, because bright pink line is the most important Fibonacci level ever. This is the end of the minor trend. This is brick wall. This is not the place to enter into. This is the place to trade from. And this is what played out after the election. Bullish rally skyrocketed until next level, identified years in advance. No one is surprised? Bright green line, key Fibonacci resistance, key trend target on your investment decisions. And next, market moving higher. Key Fibonacci resistance becomes key Fibonacci support. And market moving higher. Key Fibonacci resistance becomes key Fibonacci support. Finally, market reaches reversal zone. This is January 2018. Identified years in advance reached. Remember that chart from 2016? What a year it's been. Knowledgeable trader knows that 2500 is key support. Do not short. And if we take a look throughout what played out the entire year, it's been brutal war zone because we are at institutional reversal zone. Market continue selling off. Market continue chopping in correction, but key Fibonacci support respected. No surprise. And this is exact same dance you're witnessing this morning on your day trading chart. This support is lifeline on S&P. And if you remember 2300 level, which was key Fibonacci resistance in 2017, this is exactly what we are looking for this morning on day trading chart. So this is exact same number we are monitoring for today if you would like to take a long trade. And if I convert this chart to 15, exact same formula remains. It's all the same. The only difference, risk management and trader psychology. And if I convert this chart to 60, it's all the same. Clear on that? So, when it comes to institutional chart, which are long-term investment charts because institutions holding positions for a long time, what is a key support we're monitoring for months? This level. This is where buyers been coming from. This is absolutely crucial. Never short near. When market at institutional support and you are a day trader, your bias firmly bullish. This is the area when institutions scaling into bullish positions. And this was the market in the trading room for weeks, since early November. This Fibonacci reversal zone identified since early November. This Fibonacci trend inception that correlates with institutional support is no surprise where buyers came from. Never ever ever short near. So, if market's selling off, it's a beautiful thing. As again and again and again, this is not software. This is pure price and Fibonacci tool you master in the course. And if you want to trade this tool on Euro, you install this tool on MT4. You install this tool on Infinity, on Thinkorswim, on TradeStation, on any instrument you trade. And you know where to enter from, when not to trade, and when to monitor for reversal at Euro staging. Very powerful reminder. This is key support present in the trading room for years. Do not short. And this is another ultimate reminder. Apple. Anyone surprised that Apple sold off? Should not be. It's a reversal zone. Spectacular earnings don't mean a thing. Fibonacci means everything. This reversal zone had been present in the trading room for years. And if I walk down memory lane this year, this was Apple. At key Fibonacci resistance, showing you where reversal zone is, reached many months later, when Apple finally started selling off, despite stunning earnings. But first Apple reached bright green line, key Fibonacci target, always in advance, never after. When Apple danced in correction, for a while at reversal zone, finally collapsing, despite stunning earnings. This is oil in 2014, 2015. Bright green line is a key Fibonacci target, as you learn in the course. This is oil monthly chart, present in the trading room since 2011. This is oil in 2016. Reaches trend reversal on monthly chart. Oil at 30 level. Oil at trend inception. This is what oil had done next. No surprise. Skyrocketed as expected. And that's the power of the method. This is oil this year. Bullish rally in progress. Reached bright green line. What do you see in front of you? Reversal zone. Not the place to buy. The place to monitor for trend reversal. Crawl is on. Slowly but surely. Oil heading higher. But as you learn in the course, when bright green line is reached, you take in profits off the table and moving your stop outside of break-even. Oil in pain. Crawl continues, slowly but surely. Key Fibonacci target becomes key Fibonacci support. But when oil reaches reversal zone, price reminding you, this is not the place to buy. Present in the room for years. And that's what price does every day, every time. When price reaches reversal zone, market's selling off 80+% of the time. This is what oil had done next. 64 is key institutional support. If this support is out, oil heading to 55. Oil hanging for dear life. Coming to this key support, where oil been dancing for months and months in 2018. This key support is finally out. Oil selling off. No surprise. As I said months in advance, oil heading to 40. I don't care how bullish the news is, it doesn't mean a thing. Fibonacci means everything. Do you want to buy oil at reversal zone? Do you want to buy Apple? Do you want to buy S&P? Choice is yours. All in advance, all predictive. This is oil now, this morning. Frozen in correction. Famous 55 number. The end of the minor trend does not mean a thing. Fibonacci means everything. 40 will be worse on oil. 40 is out, oil heading to drastically lower levels. But once again, very powerful reminder. Every single thing you learn in Fibonacci Mastery course in trend class you use not just for your day trading entries. Bright green line was famous 64 on oil. Remember this level. Key Fibonacci support. Would be so refreshing if S&P would retrace to this level, which is what we're hoping for this morning. Agree? Which is again exact same famous 1800 on S&P. Which is again exact same famous 118 on euro, where euro been selling off this year from, but again sold off from reversal zone as expected. When price comes to this green line, you exit the position. Just like 1800 on S&P monthly, on weekly, just like 64 on oil, just like 118 on euro. Just like take a look on that spectacular example on Netflix that played out in the last month, which pretty much was my favorite event of the year. Why? Netflix came out with stunning, flawless earnings, adding 7 million subscribers in Europe. Did that mean anything? Of course, it did not. What meant everything is Fibonacci. This is a place to exit, not to enter the position. But, as you know very clearly, when Netflix collapsed $140 per share until reversal zone, all of this was identified in advance. Shall we walk down memory lane? Here is Netflix before. Famous 315 key support does not mean a thing. Fibonacci means everything. Netflix starts selling off because, of course, bright green line is reached. This is Netflix after earnings, crashing into oblivion as expected. But no one is surprised when Netflix reaches reversal zone. It starts rallying. The only problem on the first event, this key Fibonacci resistance, not the place to buy. When Netflix selling off again and again and again, until Netflix reverses again until reversal zone. And reminding you, bright green line never to be ignored. That's a problem now on Netflix. Don't have sweaty palms and heart palpitations. Must up your price, and if you do, the sky's the limit. Fibonacci is the only natural predictive tool in the market. It doesn't matter if you trade 1 minute, 5 minutes. It doesn't matter if you trade monthly or yearly. Fibonacci predictive power remains the same. You know your targets, minutes, hours, days, weeks, months, and years in advance, no matter what you trade. Netflix in pain this morning. This morning, a drastically different place than at the time of the spectacular earnings. Spectacular reminder. If trading on fundamental or earnings meant anything, every single person on the planet would be Bill Gates. It does not mean a thing. Fibonacci means everything. And that's a very powerful lesson this year. On Netflix, on Apple, when Apple collapsed for $46 per share, when Amazon collapsed $500 per share. My goodness. Do you want to trade on the news on earnings? Do you want to chase indicators? Or do you want to become master of the price? Choice is yours. If you would like to join us in the course, if you would like to dive right into mastery and master long-term Fibonacci trends, key Fibonacci class on Friday. The moment you sign up, you can start viewing videos from prior classes. All classes are live. Classes are recorded. I'm with students every single day. It is never a requirement to attend all sessions. It is never a requirement to attend trading room. And that's the key. There is a brief video showing you what to expect in Mastery course, where you master this tool, where you master the strategies. You can trade on any instrument you choose. And if you want ultimate best, dive into private mentoring. Private mentoring 6 months course that you can extend up to a year, and you can stop and restart at any time. Includes all group courses. Includes mastery and foundations. I set up Fibonacci tool for you on the platform of your choice. You master and focus on the instrument you choose. And if this course is out of your league and you only want to master foundations, only 4 spaces left at the lowest price in 8 years. This 6-week course will show you how to trade indicator free, how to trade pure price for entry and Fibonacci for exits on any instrument, any time frame. Live class on Wednesday, class recorded. The moment you sign up, you can view prior class recordings and education modules. The most important source on the website: what students accomplish after the course. As students from beginner to hedge fund manager trading the method. You can listen to student podcasts, you can see Facebook reviews, you can see students' performance. From option trader to hedge fund trader to stocks trader, trading the method. To very recent student who is right now in the mentoring, who is right now in the group course, who is right now in foundations course. And the most important source, thousands of videos on YouTube channel. Review at your convenience, and never hesitate to contact me if you have any questions. 925-257-4298 or info@fibinstitute.com. As S&P reminding you, never disrespect Fibonacci target. And if you trade by the rules, the skies are the limit. And if right now S&P is not respecting this key support as oil did for months, market will crash until this level. But first things are first. Remember, we decided to monitor for long. As we knew extremely well, this is not the place to enter. This is a place to expect reversal from. It's all the same. Master the price and you will never need indicators again. Start today, and 2019 will be spectacular, joy-filled, profitable year without sweaty palms, without heart palpitations. As market testing you to the core every day, every time, for knowledge of price action. Because only if rules are met, you can take a trade. Rules are not met. Do not touch this market. It is that pure and that simple. Choice is yours. What do you decide to trade?